Today we are going to be talking about PayPal and their Q4 earnings. We will also take a look at some recent layoffs that the company announced, as well as go over some recent business developments around their PayPal and Venmo apps and services. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Let's start off by taking a look at PayPal's stock chart, and the stock has recovered very nicely from its 52-week lows of around $50. It is up around 25%. However, if we look over the last year, the stock is still down over 25%. And over the last 5 years, it's down over 30%. And this is all despite top line revenue numbers growing by over 100% over the last 5 years. We could see at the start of 2019, the company had a top line revenue of around $16 billion. That number has grown all the way up to $29.1 billion in 2023. And GAAP EPS numbers paint a similar picture. We can see that at the start of 2019, the company had a trailing 12-month GAAP EPS of around $1.85. In 2023, that number has hit $3.35. And PayPal is poised to become even more profitable and efficient as they are planning to cut around 9% of their workforce over the course of the next year. The company currently has a staff of around 29 to 30,000 employees, so a 9% reduction in headcount equates to around 2,500 workers. And this follows suit with a lot of the tech industry, as we have seen layoffs from Microsoft, Google, and Amazon. And in total in 2024, we have actually seen almost 200 layoff announcements so far this year, affecting almost 45,000 workers. It's never fun talking about layoffs. However, this is something that we see, especially after large periods of growth where the economy all of a sudden starts to slow down. These tech companies will hire a lot of employees as they are growing very quickly, and then when the economy starts to slow, they will have to lay off a large number of those employees. We've seen this with a business like Meta, where they hired a lot over 2020 and 2021. However, they have focused their last year and a half on improving efficiencies, and we can see how much that has impacted their business, and I believe that is what PayPal is trying to do here. Coming in as the new CEO and laying off a large number of employees is never a great start. However, Alex Chriss is focused on growing the underlying business as well by improving customer and merchant experiences. And Alex Chriss plans on doing this by transforming their checkout process, as well as introducing Fastlane by PayPal. And PayPal is planning to transform their checkout process by removing any annoying interruptions like password prompts or lagging response times. And to address this, PayPal has massively accelerated their checkout process to get customers to choose PayPal by integrating password keys to enable customers to log in with their faces or fingerprints with one tap. And this is to improve latency. In fact, this will reduce latency by around 50% and enable customers to check out twice as fast. If you have ever shopped online or even ran a Shopify store, you understand how annoying this is, not only for the customer, but also for the merchant. From the customer experience, when you run into these pop-ups, oftentimes you're turned off and really don't proceed with the sale because it can be a little bit annoying to track down your passwords, and by that point, you may no longer want whatever this item was. And for merchants, that can be very annoying as well, because it means that they are losing a sale. And Fastlane is how they plan to roll all of this out. It is a new one-click guest checkout experience that merchants using PayPal's platform can offer their shoppers. And PayPal has already started rolling this out with some pilot merchants, and they have seen very good results, with Fastlane recognizing around 70% of the guests and accelerating checkout speeds by nearly 40%. And PayPal is also rolling something out called Smart Receipts, which is a very interesting concept because they are trying to use AI technology to predict what customers may be willing to buy next and offering coupons on their receipts based off those predictions. And this is a great way for merchants to upsell their customers. By offering coupons on the back end, they are promoting and encouraging customers to come back to their website and spend more money in the future. And PayPal is also focused on improving the Venmo app by rolling out new features to their business profiles. This includes things like subscribe buttons, profile rankings, and the ability to offer promotions to customers. And all of these things show PayPal's focus on not only customer experience, but also merchant experience and driving more sales for those merchants. All of the items we just discussed will not have an effect on this quarter's earnings. However, over the long term, they will improve the business. This quarter, though, we are expecting earnings to come out on February 7th, and analysts have EPS estimates sitting at $1 $1.36 and revenue coming in at $7.87 billion. An EPS of $1.36 represents a year-over-year growth of around 9.7%, and revenue coming in around $7.88 billion represents year-over-year growth of around 6.8%. Other important metrics include revenues from other value-add services reaching around $778 million or 14.3% growth year-over-year. Analysts expect total payment volume to be sitting around $403 billion compared to $357 billion a year ago, and transaction margins to reach 45.8% compared to 49.7% a year ago. And margins is where investors are getting concerned because we are continuing to see them drop year over year. And oftentimes for a business, you do not want to see that. You want to see margins increasing as the business becomes more and more efficient. However, in PayPal's case, we are seeing competition coming into the market with Amazon Pay, Google Pay, Apple Pay, and that is hurting some of their margins. And that is what is concerning investors in the long run, is will PayPal be able to turn this around and improve their margins over time? And this is going to be a key metric because if they come in better than what analysts are expecting on their margins, that could really drive the stock up in a major way, especially over the course of the next year. If they start reducing their headcount, how will this affect their margins, and will they be able to get back closer to that 50% mark? Overall, for the current year, analysts are expecting PayPal to put up an EPS number of around $4.95. They have a low estimate of $3.80 and a high estimate of $5.02. And on average, they're expecting that EPS number to grow to $5.48 in 2024. They have a low estimate of $4.32 and a high estimate of $5.83. But I also want to see PayPal focus on their top line numbers as well and getting back to growth, because right now in 2023, analysts are expecting their revenue to grow by only 7.6% and 8.1% in 2024. I would like to see them get back to pre-pandemic top line growth numbers of anywhere from 10 to 15%. Over the last 2 years, their top line growth numbers have been anywhere from 6 to 10%. So getting back to 10 to 15% growth would be a major improvement for the company. However, I don't think this will be the quarter that they will come out with some major beats on their EPS numbers. That has to do with what we have seen from companies like Visa as well as MasterCard. Visa came in with a 3% surprise beat on their EPS numbers and revenue beat of around 1%. And MasterCard with almost the exact same, EPS beating by 3% and revenue beating by around 1%. One thing that could help PayPal's EPS numbers over this last quarter is share buybacks. We can see that in the previous quarter, they reduced their shares outstanding year over year by around 5%. If they're able to do that again over this last quarter, that could help bring EPS numbers up in a major way. One of the most attractive things about PayPal right now is its valuation and how incredibly low its forward PE ratio is. Right now, it's trading at a forward PE of 11.25, while Visa is trading at a forward PE ratio of 27.93 and MasterCard at a forward PE ratio of 32.15. And that's really why I own shares of PayPal, is because the valuation is so incredibly low, especially compared to their peers. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.